Hi everyone, I am Karan and welcome to Karan's Gyan. Today I'll give you a detailed analysis of PVR rights issue and give you reasons on why you should stay away from PVR and why it'll burn your hard earned money. So, let's start. As you know, a lot of rights issues have come lately. We got Atibla Fashion and Retail, we got Reliance Industries Limited, which was a bumper rights issue. We got Shriram Transport Finance. We got news about Tata Power coming up with its rights issue, and even Mahindra Finance. So as of now, we've got PVR rights issue in front of us. We can see the rights issues at 784 rupees per equity share, and the ratio is 7 equity shares for every 94 equity shares held. That means if you hold 94 shares, if you are a shareholder of 94 shares, you are eligible for 5 equity shares. Just so that you know, we have a discount of at least 26%. As of now, the market price of PVR is going on at about 1065 rupees. So if I compare this figure to the figure of 784, I see a 26% discount. So the ratio is 7 is to 94, and for you to be able to avail these rights issue, you would need to be a shareholder by 10th of July. So by 10th of July you need to have 94 equity shares or equity shares in the multiple of 94. So ISIN and National Securities Identification Number is this. You would be able to trade on your rights entitlement once you receive them in your NSDL or CDSL account on 10th of July, and the issue period is between 17 July to 31st July. You can opt for the issue period then, and it's one tranche of rupees 784 rupees, so you have to pay all at once. There is no delayed payment uh, suggested by the board. So we look at the impact of PVR rights issue. So let us assume the price of PVR is 1050 rupees at the rate 31st of July. That is the X rights date. So that is when the rights would no longer be able to be subscribed. You won't be able to subscribe to the rights after 31st July. So this makes it X rights date. So 1050 rupees at the rate 31st July, the value of the shares you're already holding is about 98,700 rupees, 94 into 1050, and the 7 shares that you'll be able to subscribe for each at 784 rupees, they'll be valued at 5488. So basically add both these amounts and subtract it by 101. 101 is basically 94 plus 7. Hence the new price would be 1031 rupees and 50 paisa. So this is basically the impact of the rights issue on PVR share price. Now I will talk about why you should stay away from this rights issue. You know, coronavirus has severely impacted Bollywood and movie theaters, and we'll just look at the valuation of PVR. So PVR's valuation is very expensive. We see that if it has a price of about 677 rupees, its valuation is considered very expensive. We consider its valuation to be fair when it is priced between 208 to 250 rupees, so it is valued at 4 times high, you know, and this is why I'm telling you to stay away from PVR. PVR has a very high valuation, which the market would realize really soon, that PVR has a very high valuation which is not justified. Financial trend is very negative. Theaters have been closed since March 24th. Alright, and trust me, this virus would last till the end of the year. Every company is working under work from home till the year end. So expect PVR to get zero revenue for 3 consecutive quarter one, quarter two, quarter three. It'll have zero revenue, and a company that has zero revenue in quarter one, quarter two, quarter three, it is a losing company. Trust me, no revenue for 3 quarters. It's gonna erode all your hard-earned money. So stay away from PVR. We look at the financials. Financials is, you can see March 20. You can see how the net sales have been plummeted. You see, they're about two-third, about 30% lesser than what they were in quarter three. This was because in the entirety of March, movie theaters were shut. So in quarter two, PVR's net sales would be zero. I mean, in the next quarter, in June quarter, net sales will be zero, and then after June, again net sales will be zero. So this is basically quarter four. Quarter one would be June quarter, yeah, and you'll have net sales zero in that quarter. Entire loss. We can see there's a loss of about 75 crores in March 20. So you can see there'll be a huge loss, huge loss in quarter 1, which is June 20. In quarter 2 also there'll be a equally big loss, and quarter 3 they might be able to break even but still expect a loss. Now I will give you the verdict of all the shareholders. I want to show you something, which is this. This is what I want to show you. I want to show you the shareholding pattern, and this is very important. See, March 20, mutual funds had about 20% shareholding in PVR. They were betting big on PVR, and now they have decreased their shareholding by 5%, and now the shareholding is 14.91%. And who has picked up the shareholding? Non-institutional retailers, non-institutional investors. Who are non-institutional investors? They are retail investors, people like you and me, who are betting for stocks, waiting for turnaround. And trust me, PVR is not a turnaround money, and you're blowing up your money. This Netflix model has infatuated everyone. Everyone is watching through Netflix, and no one would go to theater for the next 6 to 9 months because of the scare of coronavirus. They rather watch movies at home than go to a theater. And PVR charges you like $1,000 for a movie. And in this environment, when people are jobless, they don't have luxury, they are not able to spend. PVR is a luxury product. Alright, only those who have money can go there and buy movie tickets. Alright, otherwise people would watch movies at home. So PVR, you should stay away from PVR until economy recovers, and stay away from this stock. You can see debt to equity. Debt to equity is 3.0, which is a very bad news. It has high debt. That means it has high leverage, and there's a downturn in the industry. That's why this debt would kill PVR. And trust me, the share of PVR would go to 400 or 500 in the next 6 months. So stay away from PVR and don't invest in PVR. So guys, this is pretty much my take on PVR rights issue, and I advise you to completely exit from the stock and don't waste your hard-earned money on PVR.